As expected, the euro reacted to the outcome of the ECB meeting with modest gains. The British pound followed suit. The regulator cut its three interest rates by a quarter of a percentage point, taking the main refinancing rate down to 4.25 from 4.5% in the deposit rate to 3.75% from 4. ECB President Christine Lagarde said that it was a tough decision. The central bank confirmed a widely anticipated reduction in interest rates despite lingering inflationary pressures in the euro area. In updated macroeconomic projections, ECB staff raised the annual average headline inflation outlook for 2025 to 2.2% from 2%. This means that the regulator is likely to take a wait-and-see approach to monetary policy. That is, the ECB will not be in a hurry to lower interest rates this year, even though markets are pricing in at least one more rate cut. So the situation is quite uncertain. Against this backdrop, the euro remained range-bound, with market participants shifting their focus to two-day statistics, which include important jobs data. Today's macroeconomic calendar includes data on industrial production and trade balance from Germany. France is also scheduled to release statistics on its trade balance. In addition, Eurozone GDP growth data is due out today. The bloc's economy is estimated to have grown by 0.3% in the first quarter of 2024 compared to the final quarter of 2023 and by 0.4% from the corresponding quarter of the previous year. As for the statistics from the United States, all eyes will be on the nonfarm payrolls report. Estimates suggest that U.S. nonfarm payrolls likely increased by 185,000 jobs last month after rising by 175,000 in April. If the data is better than expected, the dollar may well regain ground. Traders may also take notice of the U.S. unemployment rate, which is forecast to remain unchanged at 3.9% in May. Furthermore, the U.S. is set to report data on average hourly earnings. Economists expect a rise in the indicator. All of this will drive up inflation, thus increasing price pressures. Now let's move on to technical analysis. The 1-hour EUR USD chart shows that the 1.0888 level acts as the middle of the sideways channel. A false breakout at this mark will generate a buy signal, pushing the euro up to 1.0915. If the price breaks above this level, the European currency will extend gains to 1.0942 and probably 0.960. At the level of 0.960, I recommend going short on the rebound to catch an intraday correction of 15-20 pips. Short positions at 1.0915 and 1.0942 can only be considered on a false breakout. In a bear case scenario, if the price breaks below 1.0888, the euro is expected to dip to 1.0864. Its breakout will open the way to 1.0847 and even 0.829, where it would be wise to buy the pair on a rebound, counting on an intraday correction of 20-25 pips. However, this scenario is likely only in case of strong US data. Going long at 1.0847 and 1.0864 will be relevant only on the false breakout. Speaking of the British pound, buyers have every chance to drive it up as today's macroeconomic calendar is bereft of any important news releases from the UK. A false breakout at 1.2784 will generate a buy signal, with the pound-dollar pair climbing to 1.2814 mark. However, its breakout is possible only in case of weak US data. If the price still breaks above 1.2814, sterling will extend its bullish run to 1.2853 and probably 2890. At the level of 1.2890, traders can go short on the rebound, expecting a 30-35p move. Short positions at 2814 and 2853 can be opened following a false breakout. Alternatively, a sell signal will be generated if the price falls below 1.2784 amid upbeat data from the US. In this case, the British currency will dive to 1.2755 or 1.2725, where traders can go long on a false breakout. In the event of a deeper slide, it will be possible to go long on a rebound at the level of 1.2695 to catch an intraday correction of 25-30 pips. Good luck and have a great weekend.